My next guest says, remember the power of positive thinking, right? Of course, that means let's bring in SlateStone, their chief equity strategist, Erin Gibbs. All right, so Erin, you looked at the third quarter, right?
Yep.
By the way, power of positive thinking. I love that. You've always been that, though. You've always had a cheerful smile. You've always been upbeat. And one thing that you're looking at too now, third quarter earnings. Listen, this is sort of the earnings trends, positive guidance. Obviously, it's trending up really nicely.
Yep.
And this is one of the things that you feel confident about carrying the rest of the market, maybe?
Absolutely. And if you look particularly at that Q3, this nice little spike right here,
right.
This has been revised up from 8%, and it's now almost 9%, which is really unusual that since the beginning of the quarter, normally estimates come down because everybody gets a little Debbie Downer.
Right.
No,
they like to lower the hurdle,
yeah,
right?
Yeah, they like to lower the hurdle, so
yeah.
you got the other nice beats. But they learned after Q2, you better raise those estimates. Things are better than
so
we thought.
This is a tell for you based on history and, of course, the idea that, that's a lot of confidence to be able to hike earnings right now into this particular part.
Exactly.
This is what I do want to ask you, though. Can we have a jobless, robust economy as jobs are fading? We've had jobless recoveries in the past, but I'm talking about there's signs that the economy is coming on, that it's reigniting, but we know labor is a problem.
Right, and part of that is we're just seeing better productivity gains. And so, yes, that can be related. You can see great profits, you can see increased productivity, and yet have less hiring. And a lot of that comes from some of the enhanced technology and so on. So it is possible, and there's always a slight disconnect between Wall Street and the economy.
Yeah.
They don't go hand in hand.
I tell people all the time, if the stock market was the economy, Germany's stock market would not be up this year. That's all I'm telling you.
Right.
AI warning signs. Okay, you're a little concerned. Earnings and accounting, obsolescence and longevity, earnings risk, this AI boom funding, all of these things have been in the media. The stocks haven't suffered from it. So how do you handle this as someone who may be in these stocks?
Right. So I would say still own them. Like it's not at the point where you want to sell them immediately. Follow those trends. But I'm saying when companies start changing their accounting methods, when they start changing their depreciation methods,
we'll call that a red flag.
Yeah. That's a flag when suddenly you could say, oh, we used to amortize this over 5 years.
Yeah.
Now we're doing 7. That's the little.
Or when they make up their own metrics.
Right, and they make up their metrics. So we're seeing some initial warning signs. When you start playing with the books, you want to be a little concerned. So I'm just saying, just be careful.
Right.
And if you see the weakness, get out.
All right, let's talk about small caps. And go back to earnings. So again, small caps, S&P 600. This is your yellow. And they're going to start next year, right? Every quarter. They potentially will out-earn the S&P 500, the broad market. So you want to start to get positioned now.
Right. I mean, obviously we have the Fed as a nice tailwind to help us get through with the companies that are particularly starting out. But we're really seeing finally that kind of growth, and in some cases, 50, 75% higher earnings growth versus the S&P 500. So I'm just saying, give the small caps a chance. I know they've been underperforming for a while, but give them a chance.
Next time you come on, we'll talk about your track record. You have 5 names, 4 up big, only 1 down slightly. But instead, because we're running out of time, I'm going to talk about this Cloudflare.
Yeah.
Full disclosure, I have subscribers in the stock. It looks absolutely wonderful on the chart. Just hanging above the 50-day. It's on the cusp of a major breakout. But you also like fundamentals. You study fundamentals as well.
Right. And they really are doing exceptionally well. They've had really good records on earnings beats. But also, they're just in that space of handling a lot of data. They're also expanding into AI, expanding into cybersecurity. They've been winning the right contracts. And so I think they really are poised to become a much larger and bigger company. And then, the chart's saying that.
That's right. This is a breakout. I can't wait for it. Look at this relative strength. A lot of room on the upside. It's always good to be in the same stock as you. Erin, thanks so much. Appreciate it.